Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today they give the Bulls a big brushback pitch. What you call today is almost an old-fashioned bull trap, because on Friday we closed at the highs, then we gapped lower today, held lower, and then continued in that direction. So what did you have to do? It all depends on your time frame. If you're a market participant that follows intermediate type trends, that follows the 8-day or the 21-day, you had some decisions to make. We've been talking about our strategy to be in portfolio approach, stay with a nice variety of positions that are working as long as they stay above the 8 or the 21-day moving average, depending on what your skill set is. Last week we kind of went a little back and forth with the 8-day, but then Friday's job number powered it through, and then boom, today we closed on our lows. So a lot of people are like, what are you thinking, Red Dog? And I'm like, well, right now you have to be almost short-term cautious, all right? Intermediate, I'm still bullish. Long-term, I'm still bullish, but we just came a long way, so why not get back into more neutral, get rid of some positions that you don't want to hold through what could be a little bit of downside action, and get ready in the right frame of mind so when we get to key levels, you could test them. And if they get to these levels and they act like crap and stocks underneath don't hold up well, then maybe we test other levels. But you don't need to truly know where we're going to go if you sell strength. That's what we call trim and trail, when things are working, and then once they give you this brushback pitch, you use high-level stops if you're not committed to the situation for the longer term, so then you could readdress them and revisit them and not sit through the stress of what could be some type of retracement. If you look here at the chart of the spiders, you will see, I know that on this day, when we closed near the 8-day, it was right in front of the jobs number, so I got a little bit lighter as it is. You had a small outside day, we were at the 8-day, so why not take a little bit off? And you saw some faulty action, but it wasn't the end of the world. So that's why on this gap up, I was a little, my positions weren't working so well, and I got, hurt a little bit in the hedge because I was thinking that, we came a little far, a little fast, and the 8-day could be breached. But again, with the jobs number, I wasn't that heavy. So anyway, with that said, you look at how we started the year, so to speak, and as you could see, we gapped up, went sideways, held the 8-day, bounced off it, and then we've been tracking it the entire way. So now it's starting to get a little bit wishy-washy up here. When things get wishy-washy after an earnings season, after a big run that actually started back in November, you remember that Red Dog reversal on that Friday. P.S. Here we are. So with that said, if you're a macro investor and you've been riding this trend, and you've been, you had your June 4th low, your November low, you go even further back and you have your October reversal, you don't really care because you're not an active professional trader managing the ranges of the market, or using all these patterns that we go over in some of our swing trader courses. You're just sitting through and, taking a little risk on, risk off. Here, switch gears, risk on. This is when this downtrend got broken to the upside. Here is when we consolidated, risk on. Here was that head and shoulders, top pattern, way back when, risk off, nice reversal low, risk on, topping tail right there. Remember when this uptrend broke to the downside, risk off. So there's been a lot of ways to take an intermediate approach or a very active or a step back macro. It all depends where you are. For me, I tend to be more of a active to intermediate. So for now, as you can see from my virtual trade floor, if you're a subscriber, right around here, I think I had my most positions 10 to 12. And then even when we broke through the pivot, I think I even took my hedge off for a day trade, to catch a little bit of the move before putting it back on. So right here, when things are getting faulty, I'm out of the way a little bit. We closed in the low, so tomorrow we'll know that this is our pivot. You'll probably see me tweet saying 149.43 is today's pivot to trade around. So if we went below it, came back above it, we'll see what happens. But then here's your 21-day moving average moving up 148.32. And there's that pivot high. And if you see, we haven't even touched the 21-day the entire time. So at this particular point, the bulls were a little spoiled, which is fine. Me being included. When can I hang out and hold 10 to 15 positions and sleep well at night? Not that often. Last year was probably the first time I started doing more of a portfolio approach during that last time we followed the 8 and 21 day last quarter, which was different than this quarter this year. If you look real quickly one more time back here before we get into some stocks, that was right here. Very similar environment. Okay, here's when we broke above into the 2012. And then we followed the 8-day and we danced around it once here. Here it looked like it was going to close below, didn't. Then finally closed below, but you know what? Led to nothing. Okay, and we didn't top out until April before finally the moving averages curled over, created this head and shoulders top, broke below, closed below both decisively, and that started the correction. So a lot of guys in here that were thinking correction time, who knows if they held through, but it didn't matter if you were pretty tactical. You know, you had a nice, easy trend somewhat until right around here, which was close to, this was 1400 from when we broke out at around, what was this, 1270. So anyway, so not saying this is it, okay, because who knows, it could just get a little choppy. So why hold through if you're an active professional trader in front of your computer when you could get some better prices? So anyway, we'll see what happens tomorrow. Running through some stocks, we're in a very specific have and have top night scenario. Apple, came in today, said if we could hold 448.50, there's a chance we take out 462. It opened up, failed right away, took out 448.25. I have no position here. Look at this trend that's been intact. Much more of a sell than a buy. I know we've gotten some paper cuts along the way, but we also caught a few nice trades. This being one of them. Even this 2-day move, or when it broke this descending channel. But every time we've tried to measure to see if there was any type of commitment, like right here, it failed. So this was a spot to see if there was commitment, and it broke below. Here's your next point of reference, and if that doesn't hold, all of a sudden you got to go back to your longer-term charts. And here's a gap that continues all the way down. And it's still, can't even think about breaking this trend. I have no idea what Tim Cook's doing. He better wake out of his slumber, because I'm sure his employees, same way the investment public is starting to get a little bit antsy about the stock. So anyway, another thing that was a little weird is, not weird, but Google, it's never good when a stock closes on historic highs, because a rule for traders is, stock closes on the highs. You take it home long, especially through historic highs. And today it got downgraded. You walk in, it's down 6, and it never even really attempted to fill the gap. So all in all, you look where it is, it's no big deal. But as a trade, it could be frustrating.
I'm Mark Sperling,
right? Closing the dead highs, opened a little bit lower, closed on the lows, but
T3
still above the 8 and the 21
Do you trade on your own, but you wish you
above,
enjoyed the benefits of a large trading floor?
So
with the T3 Live virtual trading floor, we deliver that experience to you on your computer.
Today's low tomorrow, which is right around 758.27, to see if it could hold here. And if all of a sudden we start breaking the 8-day, then some of even the strongest stocks aren't holding up well. If you remember, after the report on Amazon, everyone had all these opinions on Amazon. I'm like, if it doesn't get through 284, perhaps short against there. And then they had all those images of, what's it called, the CEO laughing. And meanwhile, their valuation's high. And since then, it's been coming in. You look at the chart, this was that top right here. Okay, this was at 284 where it failed at when it opened up. And since then, it's been a drip down sell. So here we are into some support. Well, tomorrow we'll see how we handle this pivot for a trade. But otherwise, now it's below the 8-day, below the 21-day, and it could see some lower prices. You almost, let's put the 50-day in, because some of these things are actually coming into the 50-day. So we're breaking it, which I'll get to in a second, which here's the 50-day on Amazon. When stocks start to break their moving averages before the indices, you have to take notice. Even Facebook today, this one got me really good. I apologize if you guys followed me on this one. It was a really good trade to start the year. This is when, I've been trying to treat it more as a swing trade, and it was a really nice one right in here where you could have added. Here was that little reversal. Then it went in motion again right after this nice, 2 weeks or a month or so, went to the highs. And then look what happens when it starts to get a little choppy. So anyway, kind of got a little blind on this day. This was your earnings day where it opened lower. We talked about buying perhaps into 28. Pre-market, you could have bought it. After hours, you could have bought it around 28, went positive. Thursday went positive. So on this Friday, I just was, I guess, a little blind. If you look what happened on Friday, just to show you what we missed, because this was Thursday, this was Friday, right? Look at that down day closing near the lows. What did the spiders do on Friday? Go here, close near the highs. I was making actually excuses. I was saying to myself, you know what? They're probably just trying to beat it down for option expiration, the 30 stock, strike price, this and that. But meanwhile, I didn't see we were up a lot. Relative weakness. Maybe somebody knew that the Barron story was going to be bearish and say 25, and that's what came out over the weekend besides another downgrade. So with that said, when they came out with 15, it did go down for a while from 23.74, but then lo and behold, it went to 32. So again, I don't think the high of the year is in on Facebook, but it's a bit bent, so I would just give it some space. So you go back to this chart one more time. I would just be a little bit careful here. For me, I got stopped out. I don't like the fact that it closed, through the 50-day. So I will see if I could be a little cuter and see if there's perhaps a better buy right around here, because it has come a long way. And again, as a professional active trader, I'm in front of my computer. I could I could push the buttons. Who knows? Maybe tomorrow we get a red dog reversal where it trades through the low of 28.01, comes in, comes back up. So then at least I have, a new point of reference. But for right now, when something closes on the dead lows, I'm not in the midst of being a accumulation. I'm not in accumulation mode right now, especially considering, we could pull back a little bit more. Look at the Qs here. Qs have been the weakest group with Apple, obviously. And here you go. Look at this range. Look at this big wide range bar engulfing this entire monotonous, choppy, what. So this is a little bit of a discouraging sign. So we'll see what happens tomorrow. We'll see how much of this gap it gets filled. But this has been a laggard sector. So if we do turn lower, typically laggard sectors lead the way lower. We'll see what happens there. Today, for probably the third or fourth time, I'm cheating a little bit to try and catch a breakout in gold and silver. Every time we've done this, we've lost a little bit of money because resistance is resistance until it breaks and closes above. And if you look at GLD, I just think, unfortunately, I have a lot of people that I talk to also, and a lot of them are gold bugs, so they're always getting me over to this trade before it actually triggers. So I am in some. If it were to start getting above, just say this 163.04 with some authority, perhaps that could ignite the trade. We shall see. For it to get real good power, I think it's got to ignite through 164.40. So it is tight here. Okay, you have this somewhat of a small little trend intact. Can it finally break this series of high, lower, high, lower, high, lower, high? It hasn't yet, so you got to be a little careful. You can't be in too much. Same thing goes for silver. It's getting close. But again, every time you've bought it at resistance, you got a little bit hurt. Even if when it closed above, boom, it's been very faulty. So at this point, you could be in some. I'm in a tier 1, and really, you should not get big or the trade doesn't turn on until you see something like this. Remember this over the summer? This was a great trade. All right, this was when it broke out, closed above it with authority. And if you look there was also volume attached. So you go to your basic studies on here, to see what a real breakout looks like. And here was that level through, and this was the volume. Actually, no, it was not even that much volume. But anyway, that was the move that happened before gold went, and then you had a nice move. So here, we'll see. I'm in some. We'll see what happens. Especially perhaps because of the outsized gains in the other sectors. Money rotates here, and some fear out of Europe, this and that. We'll see. Also, some guys were looking to do a contrarian trade on the FXY. Look at the size of this move this thing has had all the way from the highs here. It's gotten absolutely annihilated. So right here, I took a little bit with them. Could be a little bit of a contrarian trade, but contrarian trades are tough because you're going against a very strong trend. So we'll see. You could have done the same thing, with this YCS. But again, look at the trend. Hasn't even broken the 8-day. So if you do it early, you're cheating a little bit. When you try and cheat and try and be cute, it can make you ugly relatively quickly. Netflix, still impressive in a world of its own. Shorts are trapped. It's been behaving really well since earnings. Here's your gap up. Nice flag right here. Seems as if it gets above 177.25. It's going to go again. Keep that on your radar. And if you're shorting this, you better not have an opinion. If you're looking long, it looks like that's been the way, you're getting rewarded. Nice bull flag. It's like pretty much a textbook bull flag where here's your pull, here's your consolidation higher, and then this could be your continuation. So we'll see what happens tomorrow. So with all that said, maybe, this was the correction. Who knows? But I'm not sure. So why make big bets? I've been trying to hold, like I said, on average 8 positions. My peak was around 15, and now I'm, I think, at my lowest amount of exposure as far as the long side, except for some metals. So I'm going to wait and see and let the market prove itself that we could stay with the commitment. And we broke the 8-day. My plan is ride the market until we plan, ride until it breaks the 8-day. And if it breaks the 8-day, see how it acts around the 21-day. 21 days sometimes is too quickly to buy it back, but I like the fact that it also overlays with that 1474 breakout where at least at that spot we'll test it. We'll measure it and we'll see what happens, and we'll look at the landscape and see what the leaders are doing. So with that said, again, you don't know which way things are going to go, but if you trim and trail into some strength when things stretch and take profits, you never get hurt. If you use high-level stops on the trailer and lose a little bit there, okay, you stayed with it. And then if you're in a neutral position as the market figures it out, every level you go to, you can have a clear mind to test it. Scott Redler, T3 Live. If you want, tune into CNBC World Markets. I have to run out of here because I'll be co-hosting for an hour from 5 to 6. Later.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.